SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Good morning everybody, let's have a look at these charts then, shall we? I'm going to show you something as we are seeing the inevitable sell-off at the moment. Everybody's panicking, I can imagine. Oh my god, I thought we were moving up, I know we're moving there. Well, it's not as bad as you might think, in all fairness. Not quite yet, at least, anyway. There's a few intermediate support levels on Bitcoin. First one's going to be around 16,500 to 16,600. Slice through the price action. We're more or less at the first level now, as you can see. A fair little bit here of support, just a little bit below it. If we break down from here, I would say, alright, fair enough. We revisit this area, dipping our toes back into the upper 15,000s. And at that stage, we will probably go on to make new lows. And that's fine as well. It's no big deal. It's no big deal. I'm going to show you something on traditional markets, which is what I would urge you to think about when we're moving into these new lows, right? Because it's not a secret. I've been talking about it for a few weeks now. I think there is a good chance that the bear market bottom is in for traditional markets. It's not a guarantee, it's not a certainty, but there's a good chance of it. It's based around the Dixie and the Forex pairs that we look at, and the direction that the Dixie has fallen to so fast and looking for a bounce and then continuation down. I know that that's also very much hopium because everybody wants to see the Dixie go down. Look, the Dixie is a bullish chart. This could easily just be the first part of a retest of a golden cross, but on a weekly, which means that we sort of dip our toes below 100. Probably isn't gonna happen, but if it is to happen, even that would take it could take a couple more years from now. But we're not here to talk about the Forex pairs. We do that all the time. You know what I said 8 weeks ago? I said where Dixie's had a top, and I said that the bottom, for at least for a decent bounce, is going to be the 50 exponential on the weekly. So none of this should come as any surprise. This is what we said back here before the drop, and all the way down to here before the bounce. So it's I don't have a crystal ball, but if I did, it would have said exactly what I said without a crystal ball. So either way. So what I'm going to show you here isn't anything to do with that. It's to do with breaking out of a descending triangle, chart formations, from moving out of bear market into a period of accumulation and then bull market. And then what a bull market really means. So bull market, for a lot of people, not you seasoned viewers who have been around since the last bull market, you know what a bull market is. But some people think a bull market is basically just straight up to the moon, thousands of percent. That's not the case. That's not the case. It's a favourable trading environment, but it doesn't go straight up. So this is gold. Gold's having a bit of a breakout, or has had a bit of a breakout. We were looking at this on the Patreon last night, and I thought it'd be a good example to show you all this morning of what we are looking to see for stocks. So gold almost leading the pack for chart formation of breaking out of a bear market. S&P slightly behind, Nasdaq slightly behind that, and Bitcoin and crypto behind everybody. So we came down to this box of significance for gold, right? So this is like a buy zone, held up pretty well all the way back into 2021 and 2020 in fact. So we came into this zone, whoosh, bang up, and bang up, and then we sort of accumulated, I suppose, scraping into this. This is a weekly chart, by the way. Each candle body managing to close back within here, so very tight in the way that these candles opened and closed at the bottom of here, despite the wicks. Now we had a breakout of a descending triangle, right? So the triangle is, if anything, it's just showing you the pattern of a constant consolidation. So finding resistances and getting knocked back down. Breaking out of there isn't immediately bullish, although you can sometimes see some decent reactions. And gold has had a decent reaction to that. It's not the most bullish thing you've ever seen, breaking out of a descending triangle. But what it does suggest is that steep resistance is finished for the moment. So we can still continue to go down for a little bit, that's fine. But as far as being pushed down to this extreme, constantly, that bit's over. So buying into any of these areas now, if we were to come back down to these, which could easily happen, is a much better idea than buying into it around here, because here the diminishing returns suggest that you might only just get up to the descending triangle and then get pushed back down again. Buying into it this time, we don't have to worry about something like this. We can judge it by its own momentum. So buying here and moving up, that's fine. Over a period of years, this is gold. We're not looking for millions of % on this either. Just looking at chart formation. So that's one thing to think about for gold. Now, if we think about what that looks like and turn our attention to the S&P. This is the S&P, so it's still within its consolidation pattern. Bang, down, bang. And now we're looking for another retest of here over the next few weeks or so. Like I said at the beginning, I'm not looking for a brand new low to form on the S&P, although it could, which is why, again, sitting on the sidelines is best. Remember, we got the everything bounce 2.0, didn't we? We got the everything bounce 1.0. We got both of these big major swings. We said let's treat them as a bear market rally, and anything else is a bonus. So at the moment, it's a bear market rally. However, there is a chance that we're going to get something else. Just like what we've seen with gold, we might get that with S&P. And if that happens with S&P, we'll probably get it with NASDAQ, and then we'll probably get it with Bitcoin. And in Bitcoin's own way, it's kind of done this. But for the moment, we have to recognize that it's weak AF. And when it's weak AF, you know, we have to look at the strong ones to see how they're performing. And at the moment, we're pulling back on the S&P, which is exactly as we expected. So yeah, we're looking for this to do something similar to that of gold. So up, rejection, up, breakout, and then sort of fanny around in a sideways pattern, and maybe an accumulation, and then up. That would be perfect into next year, and so on and so on. Like I say, we're not looking for tearing up moves. We're just looking for this consolidation pattern to be over. So with that in mind, let's have a look at Bitcoin. So Bitcoin's also broke out of its descending triangle. That's fine. This was where it could have led us up to 26,000, or at least the 200 exponential on the daily. FTX denied us that. Fair enough. We came back into the triangle, back out of the triangle, sideways. So as far as a chart formation is concerned, similar to that of the way that gold has formed, but on a moving average relationship, it's the worst of it's the worst of all. If we take this to a weekly, what we see is, you know, the 21 exponential moving average is basically the Bollinger Band Center, sitting around 20,500. And if we go to the S&P, we actually see, we just turn all these indicators back on, we're actually resting here as support on the 20 weekly, which is pretty bullish, you know? Well, bullish within the context of being inside a descending triangle. So the S&P is way better in relationship to its moving averages than anybody else, and actually, you know, on a Bollinger Band strategy basis, you took all this noise out of here. We've got a subtle uptrend on the Bollinger Band here, and we're above it, which means we're 65% likely to remain above it. It's not the greatest odds you've ever heard of, but the odds are in the favour of this remaining at this level and moving up. So S&P looks okay, you know. Dixie is doing what we expected it to do. 8 weeks ago, we expected it to come down here and move up from here, and we've been saying it this whole time. So it's like I say, it's no surprise here, and neither is this a surprise. But given the direction of the Dixie and the quick descent on this chart, and the relationship to the moving averages on the S&P, I think it's reasonable to imagine that we do something different between now and the first quarter next year, which is break out of here and begin either a period of accumulation or maybe even a bull market. Now, everybody's talking about recession and what recession means. Depends on how the recession behaves. If the recession destroys certain banks who need bailing out or basically just close down, then yeah, you'll see crashing charts. You'll see that. You'll see crashes in the stock market. You'll see all that sort of stuff, just like you did in 2008. That's fine. But generally, if it's just a recession, whether it's mild or whatever, sometimes you'll notice that a recession often marks the absolute bottom anyway. So you might have a bit of a panic sell. If there's, we'll call them black swans, but if we see the equivalent of FTX, but in traditional markets for big banks or whatever, yeah, you'll see that on the charts. We'll see that. But shortly after that, what we'll see would be a bottom get printed, and the recession actually marks the best time to invest. in the form of that kind of capitulation. So be aware of that. When people talk about recession, yeah, it's going to be bad for the every person walking around on the street, but as far as investment is concerned, it's usually the prime time to actually get in at what could be a significant low when everybody's scared and no one's got the money to invest other than the people who invest and trade and got money to do that. Do you know what I mean? You can look back in history, you'll see that. And it was exactly the same in 2008. In fact, I'll just show it to you now, just to, won't draw a line like that, but I'll just quickly show you. So what we see here is 2008 financial collapse. There everybody gets whacked in the face, and the recession and years of austerity are provided to us in the form of a giant bull market. So we'll be looking for something similar to that. So if we do get an enormous crash in the market, then yeah, shortly after that we'll see sustained upside as that marks a significant historic low. Anyway, there's not much more to say that I haven't said over the last few weeks. Like I say, you know, it's not like I've got a crystal ball, but we did expect to top on the Dixie. We expected the bottom to hit where it has hit already. We're looking for an upside for the dollar, a bit of dollar strength, and downside momentum for everything else in the short term. Then we're looking for that to turn around. That is basically what I've been parroting out for the last, well, I suppose 8 weeks, to be honest with you, and now we've got it. So everything else should be going down. But eyes on the prize, look at the formation of gold, and let's see if S&P can mimic that. And if S&P can mimic that, it basically lays out the foundations to a more favourable trading environment for everything else. But at the moment, it's still early days. It's doing exactly as we expected. Let's leave it to do its thing. And yeah, probably just staying on the sidelines unless you've got the time to play some volatility, which there could quite easily be over the next few, well, for the rest of this week, really, moving into next week. I think this downside that we're seeing now is likely to end as soon as Dixie hits 107 to 108.9, which is basically 10 exponential, 21 exponential, and the Bollinger Band Center on the weekly. This area here is where the Dixie will get a rejection, in my opinion, and then continue back down again to make some new lows on this chart. But until then, we're looking for upside on the Dixie, downside on everything else, and it's at this stage there where we get very interested in maybe even calling and, you know, confirming a bottom for stocks and things like that. Right, thank you for watching. Hope that was interesting. I appreciate it's early over here, so sometimes my brain doesn't quite, you know, control the words that come out of my mouth the way I'd like them to. But if they have, please let me know. Like the video at this stage as well, because the algorithm apparently loves that kind of thing. Anyway, hope you have a nice day. Take it easy.